Hey everybody, it's Mike from Orderflows and welcome to today's video. Today I'll be talking about imbalances in the bars. This is just kind of a follow-up to yesterday's video that I made where I spent some time talking about stacked imbalances as well as, sort of imbalance divergence, buying imbalances in red candles and selling imbalances in green candles and what they mean. So if you haven't watched that video, that's a great video to give you some, good thoughts on how to use imbalances in your trading. And today what I'm going to be talking about is what I call multiple imbalances and how to use it in your trading. So before I begin, just take a brief moment. If you haven't subscribed to the channel, please do. I'm getting videos up on regularly, so when I post a new video, if you're interested in trading in order flow, at least you'll be able to be notified when we get a new video up there. And be sure to like any comments, put them in the comments section. Every once in a while I do go through and make a video sort of finding the nice comments, the comments that I see over and over, and explain them to people that are sort of still new to trading with order flow and want to learn more. All right, so today what I'll be talking about is imbalances and specifically multiple imbalances. Now, stacked imbalances, right, as we explained yesterday, are three or more imbalances in a bar. And what you're going to be looking for on down bars, on red candles, you're going to be looking for three or more imbalances, selling imbalances stacked neatly on top of each other, like here, 1, 2, 3, right? Just as a stacked buying imbalance will be three or more buying imbalances stacked neatly on top of each other. Now, taking it a step further is, well, Mike, what happens when there are three or more imbalances in a bar that are not stacked neatly on top of each other? Is it still important? Yes, it is. To me, it's just as, if not important. And when I say more important, is because not many people are looking for it, right? That's where you're going to get an edge in trading is by taking advantage of information that's available that nobody else is using in their trading. And remember, right, with trading, information is very valuable. I mean, people go to jail over insider information. Now, what I'm talking about is definitely not insider information. It's there for everybody to see. It's just whether or not you understand it and know how to use it in your trading. So when I talk about multiple imbalances, I'm talking about three or more imbalances in a bar, either three or more selling imbalances in a red candle, that would be bearish, three or more buying imbalances in a green up candle, that would be bullish. Now, obviously, if you do have a stacked imbalance, that will also, technically is the same as multiple imbalance, but what I'm talking about really is the ones that are spread out. Now, a stacked imbalance is very easy to see. It stands out. Most trading software, order flow software, will already highlight that to you. Okay, and again, the mind, our brains are so conditioned now that we are very visual. We like to look at pictures. We scroll through Facebook, Instagram, even TikTok, just looking at the images really quick and then scrolling on to something else. And same thing with trading, right? You are looking at sort of patterns in the order flow, the trades that are going through, hopefully try to catch something. But again, at the end of the day, you still got to know what to look for. So what are you going to look for is, bars that have three or more imbalances in them, either a red candle with three or more selling imbalances, a green up candle with three or more buying imbalances. And what I'm looking at here, this is the MES 30-second chart. And again, whether you're using a 30-second chart, a 1-minute chart, 5-minute chart, tick-based chart, range-based chart, volume-based chart, still the same analysis. Okay, I just happen to like a 30-second MES chart, which I've been using for several years now. It suits my trading style. Okay, but don't by any stretch of the imagination think that you have to only use this on a 30-second chart. No, you could use it on your own chart. So we have a bar here. It's got 1, 2, 3, 4 selling imbalances. This is a bar with multiple imbalances. Now, usually the minimum is 3 that I like to see. Honestly, sort of the more the better. And this market had been selling off from 3,900, where the stack selling imbalances. We'll just say from 3,900, which is here. But we're breaking out to the downside here. But where I got this stack selling imbalance, 3,901, and market trades down. I believe it got all the way down to 66. Obviously, we could see all this aggressive selling coming in here. All right. It starts to reverse coming up in here. First sign of some sort of aggressive buying taking place, right? You got one bar here with 4 buying imbalances. Okay, maybe it can continue back up. Nope, it doesn't. You get another 2 here, another 2 selling imbalances here, and again, you're just sort of going sideways. If you're getting long in here around 83, there just wasn't enough buying in there to really get it going up. Okay, then it just, again, mostly went sideways, after you got that aggressive buying. Then the market sort of dips down again. Again, this is a doji candle. You got 2 buying imbalances here. Here's another green candle. 1, 2, 3 buying imbalances. Again, starts to go sideways, because when you're looking at buying imbalances, you're looking for the market to rally. Just as you're looking at stacked selling imbalances or multiple selling imbalances, you're looking for the market to fall over quickly. You're not looking for it to go sideways, over the next 3 bars, or go sideways over the next 6 bars. You're looking for the move to happen sooner rather than later. Okay, now we've finally come down to sort of this new low area, 38, 65, 66. Now you're starting to see, again, now you got 1, 2, 3, 4, 5 buying imbalances. Starts to go sideways and it sort of pops up here. 1, 2, 3, 4, 5 buying imbalances. And then the market, rallies from this, 70 area all the way up into the 70, call it 77 area, where it just sort of goes sideways, right? Then starts to drift back down. Then it's kind of mixed in terms of buying and selling imbalances. You get 4 imbalances in this bar, starts to sell off a little bit, goes sideways. This bar, 4, 5 selling imbalance. No, 1, 2, 3, 4, 5 selling imbalance, but again, it just goes sideways on you, all right? And then finally, it starts to break down. The aggressive selling is starting to take over. You got 1, 2, 3, 4, 5, 6 selling imbalances, and we break to the downside. Okay, and then we get this nice vertical move up here, hit a new swing low. You got 1, 2, 3, 4, 5, 6, 7 buying imbalances, and over the next 2 or 3 bars, it rallies up from the 71-ish area all the way up to the 81 area. Now, again, some people say, well, what's the whole point of this? I see some bars that have multiple selling imbalances and they go nowhere. Well, yeah, you still got to analyze the order flow after you get sort of your trigger, which is the aggressive selling, right? Because for a move to continue, you want to still see that aggressive selling coming in. And not only do you want to see aggressive selling, but obviously you like to see passive trading coming in to support a move either to the upside or to the downside. Now, if you're used to order flow, you could easily see this, but not everybody is, so adept at analyzing the order flow. And, that's why I created my own software, because I know there's so much information there. I want to be able to see these things, quickly, right? I want to be able to identify it as soon as it's happening, because I might be focusing on one thing and sort of miss something else. And we actually have on our Orderflows Trader 6 software this feature to highlight the multiple imbalances. And again, whether you want to set it at 3, 4, 5, you could adjust it. I know some traders are using multiple imbalances in 10 years, and they're just using 2 imbalances, right? They're looking for bars that have 2 either buying imbalances or selling imbalances in a bar in the 10 years. But for this, I'll just make it 4, right? 3 is the default that most people use. But again, you could use 4, you could use 5, for markets that are more volatile, that have more, wider ranging bars, maybe you want to use 5, right? And again, you can also adjust your imbalance percentage as well. So, look at this, right? So again, sort of going back, being able to identify this, these things as soon as they happen is going to give you that advantage over other traders, right? Again, this was that stack selling imbalance in here, and it sold off. Okay, yeah, you got some multiple imbalances on the way down. That's what you like to see. Maybe you're starting to reverse. But again, the market had moved up about 6 points already from the 76 up to 82, and then you got your multiple imbalances. I much prefer to get them a bit lower to the swing low. Anytime we're coming into a swing low and it looks like the market is starting to reverse, to me, that's the trade I want to take. I don't want it to start moving away 5, 6, 7, 8 points and then get the multiple imbalances like you have here. But nevertheless, you know, it still has my interest in getting, you know, into the trade, but just sort of goes sideways. Get down here, you know, this is your swing low, obviously. And the bar after that low is made is the bar with the multiple imbalances, right? And you can see you got that nice move up, right? Closer to the low is going to give you more capacity to the upside, right? If you're buying, again, it's not about predicting the low. It's about trying to buy as close to the low after low has been made based off of what you're seeing in the order flow. Okay, then, you know, sort of going sideways in here. You know, this is not a swing high, or swing highs up here, but nevertheless, you get this stack, multiple selling imbalances, 1, 2, 3, 4. You know, does the market go anywhere? Not really. Just sort of comes off a little bit, drifts sideways. Again, this is a lower low than here. You know, would you want to take it? It's up to you. Again, you know, similar price action here. Now, sort of one of the things that I always espouse in trading is, you know, with order flow, let the market prove you right. Okay, and this is a perfect example, like this trade here. If you're getting short off of this, you know, let the bar close. That was a question I got recently. You know, why do you let the bars close? Because I want to make sure that the order flow stays bearish. Then I start to look at the next bar, right? I want to see the next bar start moving down. Here it only moved one tick lower, then reversed up. That's not a trade I want to take. Even though I have the bearish order flow here, I want to see the next bar start to tick lower and lower, not just go inside. Basically, it does tick one tick below the low here, whereas this one, it starts to break down. Next bar starts moving away from this low, 1, 2. You know, if you watch my videos, you know I like to let the market move away from a low of a signal bar like here by 2 ticks over the next 2 bars, and then that's your sign to get in. All you do is, you know, you just know that this bar is forming. You got your multiple imbalances. You drop a sell stop in here at 72.25. Here you drop your sell stop 2 ticks below this low, 72 even. This one didn't fill you over 2 ticks, you cancel it, wait for the next one. Here came in to fill you, 72.25 right here. You know, you could have been filled 72 and even, 71.75. Then same thing on the upside. We're coming down, making a swing low in here. You start reversing. You got 1, 2, 3, 4, 5, 6, 7 imbalances, right? You can see this forming as the bar is forming. You're just waiting for this bar to close, and then you drop your buy stop in here at 1.5, even 2, and it just pops right up. I mean, that's what you're looking for when you're looking at multiple imbalances. You just want to be able to identify them quickly and know how to trade them. All right, and where's your stop go? Well, I mean, obviously you gotta hide behind some of these imbalances. You know, for me, worst case scenario stop is below the low of the signal bar, or above the high if you're getting short of the bar that you're getting short off of. So I hope you found this video useful. You know, it gives you a different way to use imbalances that are appearing in the bar. You know, again, there's many ways you could use imbalances. You know, this I've explained over the last couple of days. I've explained about 3 of them, and you know, these are the most common ways that I use them. And you know, I've been using these ways for many years, and hopefully you can start to add them into your trading, or even, you know, take what I'm teaching you and, you know, put your own twist on it, right, to make it your own form of analysis. Okay, so thanks for watching this video. Again, you know, be sure to like and subscribe to the channel, and you know, that's what keeps me going to make more videos for you guys. So thanks everyone. Have a great day. Bye bye.